What's up, YouTube? I am back with another trading recap. I know it's been a while since I've made one of these videos. I've been making massive progress in my trading, in my patience, in building my edge, and I wanted to show you the trades that I placed this week. This is the first week of July 2024. It was the beginning of the week. We had 4th of July. We had some FOMC minutes on Wednesday, and then we had July 4th on Thursday, and then we had unemployment data on Friday. Now, all of these things are factoring into the market. We have to account for what's happening in the market when we trade it, and then figure out how we're going to take profits accordingly. So I'll walk you through the trades that I made this week. I only placed 3 trades this week. I'm immensely proud of that fact because I have been struggling with buckshot trades. And what I mean by that is just placing too many trades and it skews your win rate. You have unnecessary losses and it chips away at your P&L. And so I only placed 3 trades this week, and 1 trade a day, Monday, Tuesday, and Wednesday. 2 wins, 1 loss. I'm going to walk you through. I'm going to show you my statements, and I'm going to show you what I saw during each of these trades. Now, another thing I want to highlight, and I'll show you when I go through my trades, is my analysis on higher time frames. Which higher time frames? You can see right here. This is the weekly chart. I got the daily chart. I got the hourly chart. I got the 15-minute, and then the 5-minute is where I actually execute my trades. But if you do not understand what's happening on higher time frames, it's going to be much more difficult to trust your edge and what you're seeing on the 5-minute time frame. So before I go into every single day, I will look at the higher time frames, understand the story, understand where there's strength in the market, where there's potential areas for drawdowns, pullbacks, and where there's areas where my trade can run, and I can let my profit run until the next target. And so this is what I do on larger time frames, is I figure out these zones. Sometimes they are supply and demand zones, as you can see the green green demand zones that I've got drawn on the chart, or sometimes they are pit numbers, meaning previous day high, low, open, close, and then pre-market high, pre-market low. So these are the levels that I'm factoring in every single day, and these are the levels that I'm watching. Additionally, I don't think I've made a video since I started using these moving averages, but I am using EMA Clouds. And so as you can see right here, I have a green, yellow, and a red. The green is the 5 exponential moving average. The yellow is the 20 exponential, and the red is the 50 exponential. Now, I mostly use these for entries on the 5-minute time frame. However, they'll show up on any time frame because I've got them loaded on my chart here. They'll show up on any time frame, and they do help seeing where there's momentum and seeing where there's strength. Now, the main thing I use this for on the 5-minute time frame is I will not ever long a red cloud, and I will not ever short when there is a green cloud on the 5-minute time frame. And you'll see that in the trades that I take. And what this does is it helps me eliminate these buckshot trades, and it helps me scrape off the counter trend trades that I've been placing. So there's so many times in the past where I shorted a red cloud or shorted a green cloud and longed a red cloud. And what that does is it means you're fighting conditions. It means the green cloud shows you that there's a flow in momentum, and you should be trading with that green cloud. And vice versa. When there's a red cloud, you should be trading with the red cloud. So all that being said, I think we're ready to get into this. So like always, we're going to go to the higher time frames. So July 1st was Monday. So this is what we were seeing right here. Now, the main thing that's screaming to me this day is this large rounding bottom that we're seeing right here. Now, anybody probably knows the cup and handle chart pattern. Now, I'm not huge on these chart patterns on head and shoulders. However, I will look at them because they do hold value in telling you, where there's pullbacks and where we could see buyers show up. So this is what happened. We saw a large rounding bottom here, and also take into account there is a little break and retest. If I extend this demand zone over here, we see this zone created, we break it, we retest it, and we find buying in this zone. So now I know that's a valid demand zone. Now what we saw the previous day, Friday from last week, is we saw price come rifling down here, but it stops at this demand zone. So there's still buyers defending that zone. Now Monday morning, price comes down to this level. Now I did not want to short into this zone on Monday morning. I did not want to short. Why? Because there's a large potential for more buyers to step up. I only want to short when we break this level right here. If we break this level, then I will consider shorts. However, if buyers continue to show up at this level, I am not interested in shorts. I'm interested in playing with buyers when they show up and momentum shifts. So that was my mindset going into this day. And I'll show you what this looked like on Monday morning. So this is the demand zone right here I was talking about, right around 543. And this was the sell-off that I was talking about into that demand zone. I did not want to play this sell-off. And you know what's interesting is I suspected there would be buyers showing up here ready to move price higher. And what I saw was exactly that. Every single sell-off, we saw aggressive buying. Sell-off, aggressive buying. Sell-off, aggressive buying. So what that's telling me is that my pre-market plan is actually playing out. Yes, I might not have an entry yet, but the idea that I had in my mind of buyers defending this demand zone, it looks like it's ready to play out. So now I sit on my hands and I wait for that momentum to shift from selling to buying, and that's when I like to hop on the trend. So how do I tell that that shift is happening? This is when the EMA Clouds come in huge. So my entry criteria for these EMA Clouds is very, very critical. I will wait for the cloud to be green. So the cloud is shifting from red to green, so I need to see an EMA cross. The way I can see that EMA cross is when the cloud turns from red to green. So that will tell me that conditions are changing. Also, I will wait until price closes above the 50 EMA. What that does is that helps me not get caught in little fake outs. So if price just wicks up above the 50 and comes back down, I'm not entering that because that could be a little liquidity grab. I want to see price close above the 50 and see the EMA cross and the cloud now green. That will give me entry criteria. So we bounce perfectly off this demand zone that I drew out that was in my pre-market plan. We see conditions changing. Yes, there's still sellers coming in, but buyers are now aggressively pushing price higher. And as soon as we break above this level, this is where I enter my trade long. Right here. So you can see price closed above the 50 EMA, and we have a green cloud. My two criteria are met. My analysis from pre-market is playing out. Buyers are now taking control of this level, and this is where I enter my trade long. Now my stop is below the EMA cloud. So the EMA cloud, the bottom of it in this case, is this yellow EMA 20. And so that will be my stop out on this trade. I enter long as soon as we break this level, this 50 exponential moving average. Now I'm in this trade. Now what happens is we get a bit of drawdown. We never break below the 20 EMA, and then we see an aggressive push. So now this is where I start scaling out of my profit. So I bought a 10 pack on SPY of 0-day options, and I have two initial exit criteria. Exit criteria number one is if price moves 15% in my favor, 50% profit, then I will take 30% of my position. So that's what happened. Price moved to 50% profit, and I took 3 of my 10 contracts off the top. Then price moved to 25% profit. Now I'm taking another 30% off. So I've taken 60% of my position. Now I have 2 runners left. Two contracts left, and I'm letting them run until when? Until my target on this trade, which was open print. I don't have it marked right here, but this is open print right here. So that green level is open print, and that is where I want to look to take profits. I also was open to holding profits until this zone. However, whenever I saw this chop forming, it was showing that price was sluggish, showing that price was not seeing a whole lot of momentum. And so I knew that there could be momentum running out on the buy side. So I lowered my target from this demand zone on top, supply zone on top, to open print. I said if price gets to open print, I'm taking off those last two runners. And that is exactly what happened. It was tough, I'll be honest. Time decay was coming in on this day. You're holding to the end of the day. Theta increases as we get towards the close of the day. So, I was experiencing some drawdown here. Obviously, I had taken profits. So even if price closed below the EMA and I stop out, I still have a winning trade on my hands. This is what is so important for your win rate, to reduce your downside by taking profits early. It's helped me immensely, and you'll see it on the rest of the trades that I took this week. So what happened is, price kind of dicked around here, and then finally we saw a final push up to open print. I'm out of those last two contracts. This was an immaculate exit. I don't know what to say. Price never really made it above that level for the rest of the day. I was extremely happy with how I handled this trade. Now, an important thing to mention about this trade is I lowered my expectations from this higher supply zone to open print. Why? Like I mentioned before, it's because I saw this lack of buying pressure, or whatever you want to call it. Lack of strength from buying. We did not see massive follow through off of this cloud. And so what that was telling me is that I should lower my expectations for price action today. So I did that. Price moved into my target. I took my profits. I think I made July 1st, I made $411 on this trade. One trade on Monday, done. Out of that trade, on to the next. Trade number 2. So let's go back to higher time frames again. So imagine me on Tuesday morning. My analysis every single time is to look at the higher time frame. So what did we see? We saw buyers show up in this demand zone, in this little cup and handle that you might want to call it. So my plan for buyers showing up is valid. I want to still play with those buyers. Now price opened up. We bounced hard off this demand zone. We saw extreme buying off of this level. Now I have another little level here, obviously, which I was targeting the previous day, this little supply zone. Now it's green. But if we can make it above this level, I'm very interested in taking longs. So this is Tuesday. I'm still looking for longs. I'm still seeing this cup and handle chart pattern play out, and I have two upside targets. This one right here at 546, and then this one here at 548. So you can see this was my one losing trade this week. However, let me walk you through it. So whenever price makes an aggressive move and these EMAs are super extended, we call it divergence. Divergence just means that the moving averages are moving away from each other. Convergence is where they move together and they potentially cross. Divergence is where they're moving away from each other. So EMAs are expanding, showing strength in the market. And this is often very difficult for me to find entry criteria because there's no EMA cross in this case. So you have to decide, are you going to enter on a retest of this little cloud, on a bounce off of the cloud, or are you going to wait for the EMAs to dip below and then move back up, which will give you your cross? So in this case, I did not want to wait for the EMA cross. I wanted to play a bounce off of that level. So I saw that we had, this open print level that I drew from the previous day. I'm going to move it up here because that signifies previous day high. So if you look on the daily time frame, this is going to be the top of the daily time frame candle. So in my mind, I'm thinking, if we have expanding clouds, I've got a cup and handle playing out, buyers just showed up inside of a demand zone, and we have a green cloud, and we're above previous day high, all of these are screaming longs to me. There's no reason why I need to wait for a pullback. So that's exactly what I did. I saw this strong jump off of previous day high. That's where I entered my trade long. Now I did take profits here, initial profits. Like I said, I entered a 10 pack again and I hit my 15% and I hit my 25%. So I'm out of 60% of my position. So I let this trade run, and what you can see happens is we bounced off this little supply zone that we had for a pullback, and I got stopped out on this pullback. I am completely okay with this. Price came down. I basically had a break-even trade. I think I lost $10 on this trade. Now, yes, this was a difficult trade. I did see the market run for the rest of the day, and I felt, FOMO. I felt like I should get back in this trade. I really wanted to capture this move like I had predicted in my pre-market plan. But what I didn't do is I did not revenge trade. And that is what I'm working on, is to see the market move against you and not think that, I'm right. I have to get back in to prove to myself that I was right. No. None of that. I got stopped out. I took the L, very small L, not even emotional loss at all. $10. I made $412 the day before. Took a small loss. I realized that my analysis might be right. At this point, this is what it looks like. We're bouncing off this little supply zone here. There's nothing telling me that sellers couldn't come in and drive this all the way down, to the previous zone down here. So when I saw that, I stopped out of the trade. I was completely okay with it. I walked away, found other things to do during the day. Yes, price ripped for the rest of the day, but I controlled my emotions. I took profits early. I did not take a large loss. I did not revenge trade. And I protected my mental capital for the next day. So that's my trade today. This was Tuesday. $10 loss. Completely okay with me. Completely okay. These pullbacks happen. We can never predict when these pullbacks are going to happen. All good. So price ran. I didn't do anything for the rest of the day. Now we have Wednesday. Now this is the day before July 4th, remember? And before these holidays and after these holidays, in general, we have very low volatility days. So people are getting ready for the holidays, or they're still out on their boats partying hungover from July 4th. And so they're not coming back and trading the markets. Means there's going to be decreased volume. And so this is just something to take into account when you're trading around holidays. However, let's go back to the higher time frame. This was that day that I missed the long play. So I had another supply zone here at 548. Now, if we can make it above this level, I want to consider longs. You can see we have expanding EMAs here on the hourly time frame, which is telling me that the bullish trend is very, very intact. And obviously, I'm not going to short this, this green cloud. So I'm looking for long opportunities. Now, breaking down to the 5-minute time frame, we bounced off of this demand zone that we saw from the previous day, found strong buying. The EMAs are expanding. However, you can see this purple line that I drew from the daily time frame level. Now that is from all the way back here from June 20th. That is a daily time frame level. And we have another daily time frame level from June 24th. And those are the two levels that I'm watching. Now, if we can make it above those levels, then I'm looking to consider longs. That's all-time high. That is all-time high right there. If we're breaking above all-time high and we see some sort of bullish chart pattern or a green cloud or bounce off that level to the upside, there's no supply zones there. There's no upside targets, nothing. Clear skies, smooth sailing. I want to capture that move to the upside. That's what I was watching for this day. And yes, I had to wait for a while. I had to wait till 8:30 Pacific time. That's going to be 11:30 a.m. Eastern time. And that is where I took my long trade. So I always look for these bounces off the EMA clouds. So we saw higher highs, higher lows, potential to break out above all-time high, and that is exactly what happened. I hopped in this trade long. I took my initial profits at 15%, 25%, and then I scaled out of my last contracts before the market closed early the day before July 4th. Now, I think I traded only 5 contracts this day because this was before July 4th. Like I just mentioned, I wasn't expecting this kind of a move, to be honest, but I had to play the conditions that were in front of me. I'm not thinking about what ifs. what I can control is my downside. So I'm trading smaller size. I only traded 5 contracts. Normally I trade 10, but this trade still paid great because this is an amazing move. You know, everybody knows on options, as we trade closer to the end of the day, these contracts are moving like crazy. You know, time decay is coming in, and you know, if you do get on the right side of the market towards the end of the day, your contracts are going to pay. So let's just check. I made 185 on this trade. This was my trade that day. This was the long trade, and that was the end of my trades for this week. Now, Thursday was July 4th, no trading. Friday was the day after July 4th. And the way that I was approaching this day was, imagine, you know, you have the day after Christmas. You're not going to have full volume on the day after Christmas. I mean, this rarely happens. And I've been trading for 2.5 years, and I know that on days after holidays, extremely low volume. These are not days when you want to be trading full position sizes. And better yet, it's probably better to just not trade them at all and step away. You have to look at it on a balance of probabilities. Yes, this one day provided great long opportunity. However, if you count up all of the days after July 4th or all of the days after Christmas, you're going to get low volume. You're going to get weird, choppy price action that's probably going to stop you out. You're probably going to have a terrible win rate. So why not step away on those days, don't trade, and preserve your capital? Play defense. That's what I was doing this day. And it just so happened that it turned out to be a great trending day. I mean, we ripped into all-time highs. We bounced off of previous day high, which was previous all-time high. This was a great setup. If you hadn't told me that this was the day after July 4th, I would have never known. This, you know, there's plenty of volume this day. Perfect EMA cloud bounces, perfectly bouncing off that cloud. That cloud held all the way up until the end of the day. Kudos to anybody who caught a trade on this day. Phenomenal. But when I saw this price action in the morning, this is what it looked like. When I saw this type of stuff, rifling back and forth, no clear, you know, yes, here we have a lower low. Now we got a higher low. We have barely a higher high. High of day could not hold initially here. As soon as I saw all of this, I realized, you know, at this point, it's 11 a.m. Eastern, 8 a.m. Pacific time. If this is the price action we're seeing up to 11, I'm checking out for the day. You know, this basically told me, yes, your idea of low volatility and choppy price action is playing out. You can step away. This is when I stepped away, and this is exactly when the market ripped for the rest of the day. All good. All good. I do not need to trade on this type of days. You have to ask yourself, what are the things you're in control of? You're in control of when you trade. Nobody's forcing you to click buy. Nobody's forcing you to click sell. You have full power to walk away if you do not want to risk your funds on days like this. So those are my trades for this week. Like I said at the beginning, I'm immensely proud of the low number of trades that I took this week. I took 3 trades and I was up $586 on the week. So this is exactly how I want to approach my next 100 trades. Be very selective, be patient. You can see, like on Monday, perfect short opportunity, but I didn't want any part of it because it didn't match my pre-market plan. My pre-market plan for buyers. I wanted to wait. So you want to be patient, you want to be selective, and you want to decide when are the days when the probabilities are not in your favor, and then simply walk away. And then come back on days when the probabilities are in your favor. You can trade those days, decide when you want to put on full position size, decide when you want to put on smaller position size, and also decide when you want to decrease your profit target. If you're seeing things in the market, in price action, that are showing you that momentum is slowing down, take your profits earlier. Nobody is going to fault you for taking a 400% win, or a $400 win, when you could have held and made $600 or $1,000. That's $400 of profit. There is absolutely nothing wrong with that. And you cannot burden yourself with thinking what ifs. This trade on Wednesday, I missed out on a lot of profits. You cannot think about what ifs. Anyway, these are the trades I put on for the first week of July. Super proud of the way I handled this. This is exactly how I want to handle my next 100 trades. And I will catch you in the next video. Peace.